Hello and welcome to Distributed Systems and Blockchain in the News. My name is Thomas Bocek, and this week a lot happened in the crypto world. But first, let's talk about my sponsor. It's FTX, and it's among the largest cryptocurrency exchange, and they sponsor basketball stadiums like that one from the Miami Heat. They sponsor Formula One teams, and they also sponsor this channel, of course, with a significant amount of FTTs. Hello? Oh, okay. They're bankrupt. I see. So, okay, all assets frozen. I see. And what about our previous sponsor, Terra? Okay, got it, got it. This channel remains sponsor free. But yes, FTX filed for bankruptcy. The following article provides a high-level overview. It's this one here from Reuters, and investors invested around 10 billion US dollars into FTX, and it was even valued at 32 billion US dollars. And actually, Sequoia Capital, which is a famous investment firm that was founded in the 70s, they invested in Apple, Google, and Stripe WhatsApp, and they also invested in FTX. And they tweeted recently that they now have marked this investment down to zero. It's the following tweet here, that one. This is a message to the partners saying that we are marking our investments down to zero. And they froze also all the assets as reported here by the block, which they analyzed on chain, and they saw that there are no withdrawals anymore. So if you have assets on FTX, consider them gone. I also got some Bitcoin on Mt. Gox, which was an exchange that imploded in 2014, where most of the missing Bitcoins were stolen over time. They had a total of customer and own funds of around 473 million US dollars at the Bitcoin price of the bankruptcy filing. So if you have funds on FTX, I guess you will receive letters from a trustee and wait for several years to get a fraction of the funds, if at all. But this taught me a lesson: keep your funds non-custodial. And other companies are affected as well. There is, for example, Genesis Trading. Genesis Trading is a trading desk for professional investors and cryptocurrency markets, and they used FTX to store their assets. Same with BlockFi. BlockFi, you could earn interest, borrow cash, and trade cryptos, and they were bailed out by Sam Bankman-Fried, and now it seems they're completely broken. And of course, there are many more. There is a good overview here on the companies that Sam Bankman-Fried invested. Many of them are also facing now issues, especially if they had funds on FTX. Assets are frozen, and it's unlikely that they will get their funds back. Also quite interesting is Tether. It seems that Tether is following the trend. So if we go on a 1 year basis, we see that Tether was depegging. Here, that was the collapse of Terra Luna, and here we see the collapse of FTX. And to make it even worse, it appears that FTX is hacked and 600 million US dollars are being currently withdrawn. This is reported here and also by CoinDesk. And interestingly, FTX is instructing users to delete the FTX app and avoid its website. And the reason most likely is that the app has been hacked, and many users are now seeing a balance of 0 due to this hack, but probably this is now the harsh reality. And some also speculate that it's an insider hack, that somebody modified the app to get the funds out of FTX and on their own wallets. Also, Alameda Research filed for bankruptcy, which is owned by FTX, and it was worth roughly 10 billion US dollars. And also the CEO Sam Bankman-Fried has resigned. More than that, also the Future Fund team has resigned. They wrote here a letter why they did it, and also the legal and compliance team, they also resigned. So a lot of people and teams are resigning. The CEO, Sam Bankman-Fried, was considered a crypto hero a couple of months ago, as he bailed out many companies, BlockFi and Voyager Digital as an example, and he was praised for his altruistic behavior. This is an article unfortunately not available anymore from Sequoia Capital, who praised them as an altruistic entrepreneur and why you should do this as well. He also said that he wanted to give away his crypto fortune, and now due to the statements we also have some crypto memes that here it says he wants to give away his fortune, and mission accomplished. So the question is, what happened? And the Wall Street Journal has a good overview article on that, where it reports that FTX has lent 10 billion US dollars, which is more than half of its customer funds, for high risk investments via Alameda Research. And once the customers take out more funds out of this platform than is available, since the risky bets did not pay off, then the platform is bankrupt. A lot more insight into this matter provides Rekt with the following article. It also shows how Binance and Changpeng Zhao, in short CZ, is involved, and it seems that Binance gave the last push to this FTX implosion. I really enjoyed reading this article. It contains many links, many information, and they close with a very nice statement. Custodial exchanges require placing your trust into a corporation, an organization which only has profits in mind. Whether motivated by greed or altruism, it makes no difference to those who have lost their money. DeFi is the answer. I'm a big fan of Tor Wallet, as I helped building it. It's a non-custodial wallet that trades on the Torchain DEX, so it includes also DeFi, and no corporation can freeze your assets unless you use USDC or USDT, where your address can be blacklisted. So use DAI or something else. And it trades native assets, and one thing is to keep in mind, if you have wrapped assets, then if the issuer, for example, is FTX, then your wrapped asset might be in danger, as for example with this wrapped Bitcoin on Solana. So this SOBTC is a wrapped Bitcoin token. Bitcoin is roughly 16,000 US dollars, and it's issued by FTX, and this dropped now significantly. And if you own wrapped Bitcoins on the Solana network, you are probably also losing lots of money. And with respect to Tor Wallet, this is not a financial advice, as I'm heavily biased due to my involvement in Tor Wallet, and they're not sponsoring this in any way. No. There's no airdrop, and this channel is not sponsored. Any DeFi marketplace has seen a tremendous uplift, not only Thorchain, but also other exchanges such as Uniswap, and here we see the 24-hour volume. The change is plus 1173%. So there is a flow from CeFi to DeFi, and also the colleagues that are asking me if they should leave their non-custodial platform, so take the funds out and put it in non-custodial, for example hardware wallet or other solution, and my answer is typically yes. The Wall Street Journal also mentions that in traditional markets you cannot use client funds for risky bets, and regulators can punish violations. So should we regulate crypto markets? Some argue that with regulations, such misuse of funds do not happen that often, but one has to look into what cryptocurrencies aim to be, and the goal is to remove intermediaries in the crypto world and to remove the need of trust. And Eric Voorhees from Shapeshift, he argues in that direction, that with DeFi you don't need trust, and it's the following tweet here. Take a look at it. It's a good argument. However, we are not there yet. I believe that showed the Mongo Market hack. Mongo Market is a DeFi platform, and it showed that you need to trust at least the developers. Another big crypto exchange, Crypto.com, they are showing how their reserve look like. I guess Crypto.com is seeing a large outflow of customer funds as well, and the CEO of Crypto.com, he assured that all funds are safe. So did FTX and Terra Luna, but the CEO even showed their reserve addresses, and CoinDesk then analyzed these addresses in the following articles, and you can then check how their funds look like. So 60% of those funds are, I would call, serious assets, while 40% is high risk and volatile, and where 20% of this reserve is a joke token. It's Shiba Inu, it's the Dogecoin of Ethereum, a token with no specific purpose. This token reacts on Twitter rumors. If famous people tweet about it, the price goes up, so highly volatile. And again, this is not a financial advice. Not again, no, there is no airdrop, no airdrop. So let's see what will happen with Crypto.com and Matt Damon.
Fortune favors the brave.
And looking at their token, Kronos, it's also not doing that well. I guess there is a large outflow of customer funds. There are no airdrops, no Kronos airdrops, no airdrops whatsoever. And now something non-crypto related. A very interesting article is from Netflix about their journey to improve performance. It's the following article here. You can read all the details here. And their journey started with a migration to a faster machine, so from 16 cores to 48 cores, so they expected a higher throughput and a lower latency. But after the upgrade, it looked even worse. So the throughput is more or less the same, but the latency is higher. So the Netflix team then started to investigate. They found slow nodes and fast nodes in this graph here. So those are the fast ones and those are the slow ones, which gave them something to look at, and they tried flame graphs to look inside the GVM with the flight recorder, but they could spot no difference there. So they dug a bit deeper and they looked into performance monitoring counters that show L1 and L2 caches, the performance there, and they found that the problem was false sharing of the L1 cache. This is where two cores reading and writing from unrelated variables, and they're on the same cache line, so either of them has to wait, and this seems to be the problem. And with help of some tools, they run a microarchitecture profiling, and then they found out that if they insert padding to those cache lines or to those data in the cache, they could avoid being on the same cache line. So a cache line is typically 64 bytes, and if you add padding, you get to a new line. So this is how they fixed the problem. The fix is quite simple in the end. It's here add padding, this solved the issue, but they were not happy with that. They even could improve a bit more. So another improvement was then for true sharing, which then happened. With true sharing, the order is important because this causes a slowdown if one has to wait and it's not their turn. So the order is kind of irrelevant here. And once this was fixed, they could bring the throughput from 100 requests per second to 300 requests per second. So it's the following graph here. They're also on this side here. In the end, they had roughly 300 requests per second from initially 80. Then with the second improvement, they had roughly about 150, so something from between 200 and 100. And they also published their fixes, what they did. So here is what they changed in the code. However, the problem is that now they have a modified JVM and they need to maintain this fix unless this gets somehow fixed in the Java virtual machine code. And the last article is a rant about complexity. I'm also a big fan of simplicity and looking at how AWS deals with policy evaluation with their IAM. It looks more complex than it should be. So this is their policy logic, how it works, and this seems rather more complicated than it needs to be, but maybe that's why you need AWS certification to master this unnecessary complexity. No, there is not even such a thing as airdropping AWS credits. So there's no airdrop, no whatsoever. This channel remains free. It's not sponsored, no financial advice, no airdrops whatsoever.